something up with the audio. Where's my setup? Not at home. So I'm trading off the laptop this morning, today. You sold GJ? That's it's interesting. A hair transplant? No, I haven't had a hair transplant. This is my real hair. Why would you assume I had a hair transplant? It's all real. Where am I? I'm at an Airbnb. What are we trading today? Wow, I'm waiting for pound yen. Have I? No, I haven't. Did you? No, I have not. Why? Why do you ask? So if we look at GJ, waiting for price to close. This is currently the 4-hour chart. So currently waiting for price to close strong bullish above 166.500 over there, right? Rejecting the highs of the previous 2 days. And then we'll look at the new 4-hour candle opening to pull back to then flip and push to potentially fill this entire range up into 160. Well, the first being 167, which isn't too far off. And then an extended push into around 167.500, which is that the next flat cycle. So we're just looking for the momentum carry through. The 4-hour looks very good at the moment. We got an hour and 12 minutes until the close. And then we can look at the new 4-hour. Because this 4-hour will give us a very, very good idea of where we could potentially see price carry for the remainder of session. And then if we go to GU is obviously consolidating. So we're not really interested in that. We broke out yesterday, obviously a fake out to the downside, which obviously would have trapped a lot of sellers. And we've now closed back into this entire consolidation range. So there is nothing there. We don't have the momentum to carry through. And then if we go to gold, we could potentially see sells come through. But my only concern, my only problem with this is that major support, which we obviously found yesterday on the impulse. So if price can get below that there, which is obviously the bullish or that bullish structure holding, if we can get below that key support, we can then look at the entire correction of the impulse we've had over the past, like, however many days, like the past 2 weeks. But at this point, obviously, like, we're trading with the momentum, so pound yen makes the most sense. That obviously looks the best. It's like pretty straightforward. Don't know why this like camera keeps bugging out. You selling GJ? Let me know how that goes. Once upon a time, someone told me, never trade against momentum. And, well, GJ, we've got momentum. We've got bullish momentum. So yeah, I mean, listen, let me know how it goes. It either works out or it doesn't. But from what I'm looking at now and what I'm seeing, we're bullish. We are bullish. And we've broken out of consolidation range. So yeah, like the website. The website is in the link in my bio. All the information is there. How are people selling GJ when it clearly broke? Yeah, that's my question too. So we're in the same boat. We've got the same question. Maybe someone can answer us, but I can't seem to find an answer. Yeah, GJ is in a correction phase right now. It's manipulation phase. That's interesting. Who told you that? Are you sitting in Goldman Sachs that you know that? Do you work for Goldman Sachs that you know that? That's interesting. It's quite interesting that you can call phases. Normally, us retail traders, we react to price. That's all we have. That's the only information we have is price movement and market structure. So as a retail trader, that's what we trade based off of, and that's what we react on. So it's quite interesting that you know exactly what phase we're in, that we're in a manipulation phase. That's quite intriguing. Very intriguing. See, the thing is, as a retail trader, that is all you have. You have a chart which sits in front of you. On that chart, we have candles, bullish and bearish candles, and then we've got structure and price movement. And that's what we have to react and trade based off of. So like that's the thing, right? That's the thing. And as retail traders, we don't have liquidity numbers. We don't have order flow and all of that, right? So like trade what you have. And what we have is a chart with structure, candles, and well, in this instance, we've got momentum. Oh, I'm so shaky. So, thing is, still don't understand why you selling. I mean, we've taken out a supply. We've taken out a key supply. Key supply, right? Key supply. We're now creating demand. We are creating demand on the break of supply. Do you see that? I'm joining the community. Why is that? Is it because you saw the RS3? Is it because you saw the RS3? Don't let that make you join the community. It's just a car. No, I haven't actually started drinking yet. It's just it's just sitting there because I unpacked all the beers into the fridge. At the back. Yeah, manipulation. All right. No, that's cool. I mean, if you say so, you've got your style, you've got your approach. H4 will close bullish. Next H4 will push up with volume. Yeah. So Lincoln, what I'm sort of waiting for here is in the next hour is for that 4-hour candle to close bullish. And then in terms of higher time frame candle formation, in terms regarding how higher time frame candles form, you know that sort of a 4-hour, daily, and hourly candle, majority of the time, they create a bottom wick, a top wick, and a body, right? So in the case of this current 4-hour candle, if it closes strong bullish like it currently is, right, the new 4-hour will more than likely have to open, pull back. Why pull back? Because it'll have to create a bottom wick. Then what is that bottom wick essentially if you break it down further? It's just a lower time frame retest, because if you just purely look at the 4-hour candle as what it is now, we've obviously had a break in lower time frame market structure. We've broken 30-minute, 15-minute zones, and obviously those zones will need to be retested, right? So in the form of a bottom wick on the 4-hour candle, that will be the 15-minute, the 30-minute, the 5-minute retest. And then that 4-hour candle will potentially then flip bullish to continue pushing to create the body and then also create a top side. And in that top side, we could get the extended push into around 167, 500 with the momentum through that range. So that's the thought process in terms of understanding how these higher time frame candles need to form. Where we could potentially see a wick form, on the 4-hour, the daily, the hourly in specific. So that's very important to, that sort of puts it all into context. I don't know if that makes sense. I hope that makes sense. Hope you follow that thought process there. It should make a lot of sense though. Yeah, I'm on holiday for the weekend. So I can take the wicks on the H4 and dailies. Pretty much. But that's like where execution and that ties in. Is just to understand those lower time frame retests if you are monitoring and looking at a higher time frame candle. So I think that's also why it's very important. Price pushing quite nicely now as well. I wonder how that manipulation's looking. That doesn't really look like manipulation to me. That looks like just pure momentum. That looks like pure momentum. That doesn't look like manipulation. That looks like pure momentum. And like I said, we've taken out that supply. So we've taken out the supply zone. We are now creating a demand zone to push. And that is not manipulation. Oh, interesting. Refresh. That's momentum. That's just pure momentum. And you know what else is quite cool? Like, look at the time. What is the time? The time is now 11 o'clock, which means we are an hour into London session. And well, what happens in London session? It's a high volume period. where, volume comes in. And well, normally we see momentum pushes during session. And that right there is a momentum push, right? It's not manipulation. It's a momentum push. And that's what the market consists of. There are 3 cycles in a market. There is a bearish market. Well, there is a bullish market cycle, a bearish market cycle, and a consolidation phase. And it goes from, let's go bullish market cycle into consolidation. Once we'll break either way. It's either a bullish market cycle, consolidation phase, to then get your next bullish cycle to follow, the next leg in higher time frame structure, if we break to the upside. And then the break of the consolidation phase just brings about the next momentum push through in that leg of structure. And then after that, if we don't break to the upside, we'll then see that consolidation phase and we'll break to the downside. And as soon as we break to the downside, we then start and we enter into the bearish market cycle, right? And then we get legs to the downside. So then we see momentum pushes come in each leg of market structure. Because for market structure to form, in a bullish market cycle, for higher highs and higher lows to form, what do we need? We need break, retest, push. Break, retest, push. And those retests, insignificant movement in line with the plan, and then the next leg in structure with a push, that comes in as a momentum push. So nowhere in that entire market phase, or those 3 market cycles, is there a manipulation phase. You'll potentially get a fake out to the upside or a fake out to the downside, depending on where price is trading. If it's trading in a major daily zone, then you could very well see a fake out of the Asian high or the Asian low to get back into the consolidation range, to then see a shift in that intraday, intra-week structure and momentum, right? Just to give us the next leg in daily market structure. So that fake out you can maybe refer to as manipulation. But if you dumb it down and you simplify it, the fake out, all that really is being able to react to price, getting back below a key area in line with where we are trading on the higher time frames, being the daily, to then see a complete shift. But nowhere do we look at it as manipulation, right? Because you'll never be able to get ahead of manipulation because you're not sitting in an institution. Does that make sense? Like, does that resonate with you? Like, it's so important. It's so important to understand that, because if you understand all of that, there is no room to marry a bias. There is no room to hold on to biases, because you're reacting in line with what price is telling you. So you constantly have this neutral stance. You've got this like idea through analysis and through structure and what you'd like to see. You have these expectations, but at the end of the day, with those expectations sit there. I wouldn't really refer to them as expectations, because you shouldn't expect anything from the market. But that idea sits there. Okay, it sits up here. But in here at present, you sitting neutral. And only when price tells you and confirms that we are in fact going to meet and play out to the idea that was here, then you react. And then your neutral stance shifts into your sort of bias that you have sitting up here. And that's how you should approach this. Does that make a lot of sense? Does that make a lot of sense? I feel that it should. Could you break down that thought process for a community psychology video? Oh, 100%. Damon, 100%. I'll get to that on in the new week, maybe Monday or Sunday. maybe I'll get to that. Yeah, I'll definitely do that. That'll be quite cool. Put that onto the portal. Happening to gold. It's gold molting.